all these things that are underperforming Bitcoin, they're the bad money. In addition, look at the peso. The peso used to trade 1 peso to the dollar. And today the peso is like 480 pesos to the dollar. In 20 years, the peso has lost 99.8% of its value in Argentina. But in the past 12 months, it's collapsed by a factor of 2. And just last week, the Argentine Central Bank closed the doors and they said, you can no longer convert your pesos into Bitcoin on an exchange, because they realized, according to Gresham's law, that people are going to be trading their pesos to Bitcoin as fast as they can. You see this going on with the Naira. You see that going on all through Africa. You'll see it going on everywhere in the world. What's going to happen is a stampede from weak monies. But there's so many of them, right? I mean, bad stocks, bad commodities, overvalued fiat currencies. People are going to stampede from those to strong monies. If you're one of 7 billion people and you don't have a brokerage account with a big bulge bracket Wall Street firm, you can't just buy the S&P 500 index and try to custody $10 million of the S&P index on an Android phone in Africa on Saturday, right? You can't custody it, and that means you can't trust your counterparties. What we're going to see is a steady, nonstop stream of monetary energy trickling from the weak monies and the weak assets to the strong assets. And Bitcoin just happens to be the strongest asset in the world. Poorly understood, but it's a lot better understood when your bank freezes and they seize all your money and you're about to become bankrupt or impoverished. Then it's easy to understand. It's harder to understand if you're a blue blood limousine, trust fund baby living in Upper East Side, and you've got a portfolio of NASDAQ or S&P stocks, and then you think it's just an oddity. Right? What sort of things do I want to be immutable for the next 100 years? And what Bitcoin represents is it represents the most powerful cyber network, or the most powerful computer network in the world. If I gave you $100 billion and control of a nation state, and I gave you 4 years and said attack the Bitcoin network, you could try to buy up all the SHA-256 mining rigs in the world and then try to power them up. And if you succeeded after 4 years, you might be able to slow the network down, but you couldn't stop it. It's very difficult to either stop the network, to undermine the network, or to block a message. What's the killer app? Well, an obvious killer app is for me to send $1 billion from me to you and know that no nation state can block it. But the next set of applications are to embed any file or any message. If I just wanted to send a message worth $1 billion, there are messages worth $1 billion that aren't the money, but they're the message. What if I just burned my will and encrypted and inscribed my will onto Bitcoin, and it was going to convey $1 billion from one person to the other? That's a pretty valuable document, and you probably wouldn't want it to be tampered with by your law firm or by a nation state or by a corporation. And I think over time, you're going to see an avalanche of applications that will be built where the application needs to cryptographically sign and certify a piece of data that you want to last for all eternity. And you either want to burn it because you don't want anybody to tamper with it in 30 years, or you want to burn it because you don't want anybody to block the message from going from country A to country B. You're going to see an explosion of lightning activity. Lightning would allow you to move money at the speed of light for a 30th of a penny, right? Why would you want to wait 30 minutes and pay even $1, or much less $10 or $20? So I think that this catalyzes the adoption of lightning. The exchanges like Coinbase and Binance were slow to adopt lightning, but you notice that in the past few weeks, Coinbase has announced they're going to support it. This weekend, Binance announced they're going to support it. So I think this is going to catalyze every legitimate Bitcoin company to support Lightning. You can't really have a respectable Bitcoin offering if you don't have Lightning on-ramps and off-ramps. So yeah, I think that's going to explode. I think that usage of layer 3, like, Cash App, cash tag to cash tag, there's nothing wrong with that, right? Why not 8 billion people and they're moving money on layer 3s at 1 billion times an hour? And then the way I see it is, if it's inevitable that Bitcoin will be embedded in Apple Pay and Google Pay and Facebook apps and Microsoft apps, and there's 50 million people using Cash App right now that have Bitcoin transactions built into them. So it's inevitable that billions and billions of people will do their daily transactions on those kind of application networks. The significance of Lightning is the open permissionless protocol that's going to be used to integrate 100,000 companies with each other. So when Cash App wants to interoperate with Apple, Google, Facebook, Amazon, and Microsoft across 100 countries, across 20,000 retailers, they're going to use Lightning because that's going to be like the money over IP protocol. Bitcoin is the base settlement layer. The base settlement layer. People say, well, the transaction fees are too high. Okay, what is the transaction fee to transfer $10 million of an apartment in New York City from me to you? Without considering tax, it's $600,000. 6%. Is that stable? Yeah, there's a $300 trillion real estate market where the transaction fee is 1, 2, 3, 4, 5, 6% to convey real estate. What's the transaction fee to move gold, $10 million of gold from New York to Tokyo? It's $250,000. It's 2.5%. The transaction fee if I wanted to ship a yacht from the Caribbean to the Mediterranean, it's $250,000. The transaction fee to move $10 million in the form of a painting from me to you, it's going to be $1 million. That's the auction fee. People think, oh, the transaction fees are high. What they don't understand, of course, is the value of the transaction is you can burn a transaction once in 100 years. And what's the value of actually having a $10 million asset for 10 years? If you buy $10 million of an ETF, the average ETF fee is 50 to 90 basis points. So to have $10 million in an ETF, it costs you anywhere from $500,000 to $900,000 over a decade. If you think of it that way, you begin to realize that if I actually did a $10 million transaction on the Bitcoin network for $20 or $30, the alternative was $300,000 to ship the oil in a container ship. If you wanted to ship the oil and store it for 10 years, it's a lot more than $300,000. It's probably going to consume all the value of the oil. So I think that over time, you'll see Bitcoin transaction on the base layer, they'll go from $3 to $10 to $30 to $300 to $3,000 to $30,000 to $300,000. There's no reason why you can't pay $300,000 to move $1 billion from point A to point B. By the way, I'm not just moving it. When a big company sends $1 billion to another big company, that's the same as holding $1 billion of property for a decade. What's the maintenance cost of $1 billion of property for a decade? You see, it's off the chart. So we're not just moving monetary energy around and final settlement. We're manifesting it in cyberspace, maintenance free forever. We're manifesting it in cyberspace, maintenance free forever. Maintenance free forever. You're going to see a burst of activity and investment in better Lightning software, improvements to the Lightning protocol. A lot of third-party companies, if you're a Lightning service provider and you run the channels for me such they don't get shut down, you're actually providing a service right now. So this is a burst of energy for Layer 2, application development. Layer 3, application development. It's a burst of energy for Bitcoin. And, there's already a narrative that, all these NFTs and things, they're going to introduce the cultural layer to Bitcoin. Maybe, yeah. But I actually think introducing the commercial layer of transactions to Bitcoin is interesting. And by commercial layer, I mean corporate resolutions, deeds, trust, title, digital signatures, registrations, contracts, cybersecurity, authentication, all of the things that Bitcoin does well, like multi-signature key signing. Well, corporations need that stuff. They need multi-factor, multi-signature authentication for cybersecurity networks and contracts, and lawyers need it. This will usher in a renaissance of application development that's just great for everybody, and it'll be based upon a technically sound network, Bitcoin, impossible to hack. It'll be based on an ethically sound network, a commodity network that nobody controls, no issuer. And it will be based upon an economically sound network because Satoshis are the gas. Right? See, if I was issuing yo-yo coin gas, I could issue 1 billion trillion yo-yo coins. It's not economically sound. But when you're using Satoshis as gas, it's thermodynamically conservative, economically sound, capped at 21 million. Thermodynamically conservative, economically sound, capped at 21 million. So that means you have a firm foundation to build the future. I think there's no one more focused on cybersecurity than the Bitcoin community. So if anybody develops a new form of computing, the Bitcoin community will be the first community to recognize it, and they will adopt it, and they will build it into the Bitcoin mining network. Everybody else will come later and slower. Everything in the ecosystem is less secure than Bitcoin. It's like I've got the car on the street that's most secure. It's alarmed and it's locked, and everybody knows that's the hard one. They're going to steal every other car first. So you would be better off to short Google, Apple, Amazon, Facebook, every government on earth and every bank, because those will all be easier to hack first with any computer power. The Bitcoin mining rig is 2,000 times more efficient and more powerful than the most powerful CPU that Amazon AWS will rent you. So when it comes time to attack computer networks, people are going to attack the Amazon network before they're going to attack the Bitcoin network. It's 2,000 times cheaper to do it. Thermodynamically conservative, economically sound, capped at 21 million.